Jay Powell gooses the markets this week at FOMC. Let's go. When we look at a heat map of the weekly, all this bright green really almost burns my eyes, but it warms my heart. This week, if you look around, you really had to search hard for losers. And most of those were due to earnings like Nike and Lululemon, as they reported last night. In the Discord, as I post all my closing trades daily, if you look at the week, you can see here that in this column, I have all my trades, and I had 9 winners averaging close to 4%, 3 draws, and no losers. But enough about making money in the Discord by following its signals. Flipping over to the weekly showing the ratio of tech to the S&P 500, we see that tech is trying to hang on with a tail candle that bounced off the daily 200 simple moving average. We also notice here that the upper and the lower Bollinger Bands, this ratio wants to stay within 95% of the time, that they're starting to squeeze. And typically they do this before an impending move. We just don't know which direction. To help us answer this question, let's look at the percentage of stocks trading above their 50-day simple moving average. When we look at this chart, the first thing we see is that from last week, we went ahead and reversed the reversal. And at this point, starting to come into an area that we could likely start to stall out, but it doesn't look like we're quite there yet. This is going to make me more bullish next week when I get some more buy signals. But PCE is next Friday, and this may start to weigh on investors by, say, midweek, and more on Jerome Powell speaking later in the week. Let's get some more confirmation by looking at SPY Weekly. Now, flipping over to SPY Weekly, the first thing we notice here is this 5 exponential moving average that we've been riding all the way up. We went ahead and held that once more. And on Wednesday, we rocket shipped higher into close. Based on my February analysis, I have a price target. You can see this trend line along with this red line of resistance, where I expect us coming into the 532 area before running out. So if you want to find out more about that, I'll link a video at the end of this one so you can watch that analysis for February. Now, last week I did talk a lot about the dot plots and about how, if they went ahead and switched that from 3 cuts to 2 cuts, it could move markets. Well, on a vote of 9-8 with 9 voting members voting for 3 cuts, that went a long way in propping markets up higher this week. And whether you look at the exponential moving averages and how they're still showing separation from that 200 simple day moving average, the MACD line still pressing higher, or even a buy on decent buying volume, nothing on this chart screams bearish. Even if I go ahead and add the Bollinger Bands to this chart, you'll see last week we talked about these potentially leveling off. Well, guess what? They continued their ascent higher. So maybe the Qs will put us in the bearish camp. Now the Qs, they're not looking quite as strong as, we barely eked out a higher closing high on the weekly. Let's face it, last week we talked about losing that 5 exponential moving average, and this week they went ahead and reclaimed that, which is bullish. And down here, this MACD had every chance of closing below the signal, but it did not. It went ahead and closed higher. So maybe the Russell will go ahead and make us feel a little bit more bearish. Now the Russell, it looks a little bit weaker than even the Qs here. If we go ahead, we see this, that we were not able to eke out a new closing higher high. When we lost this 5 exponential moving average last week, we were able to go ahead and reclaim that area of support where we broke out and went ahead and closed higher. And it did this with buying volume that was higher than average. So I'm still feeling bullish on the Russell. In fact, if they can come back down into this 203 area, I'm a likely buyer of the dip. And I would go long again with TNA, its 3X ETF. Now, US 10Y, we can see here that it was definitely the brunt of having 3 cuts versus 2. But right now, it's holding a cluster of moving averages that you can see right here. Now, yesterday, I took a nice 3X TLT trade and made a quick 4% this morning on TMF, and I got out. So if I see us losing this area of moving averages, I'm likely to get into the TMF 3X TLT trade once again, as if yields are dumping, then bonds are pumping. When looking at the VIX on the weekly, last week we spent some time talking about how the VIX had put in some higher highs here recently. Well, the VIX went ahead and got crushed this week. I love nothing more than to see this get rejected from the 50 exponential moving averages, because if the VIX is heading lower, then equities are heading higher. If you're still feeling bearish out there, this candle is telling us that all fear is pretty much leaving the market at this point. And honestly, I'm not sure any economic reports besides PCE at this point will rattle the markets much, if at all. Likely we're going to need some kind of black swan event to change the mood of this market. And who can predict that? As signals fire on the Discord, I'll go ahead and take trades, but just go ahead and maybe lock them in a little bit sooner at a 4% level instead of a 5 or 6% level. Make sure to subscribe so you can catch some YouTube shorts where I'll go ahead and give these trade entries. Next week, besides PCE and a parade of Fed speakers, there isn't a whole bunch on the calendar that will move markets. Now, Jerome Powell does speak next Friday afternoon, but other than that, I don't think that GDP revisions or durable goods are going to move markets that much. If you want to see how I arrived at the 530-ish that I mentioned earlier, then watch my last month's analysis here, as that's all I have for now until the next video, and we'll see you then.